What's up, everybody? This is Investing Sensei to bring you another episode in the series of how many shares of a certain company do you need to own to make $1,000 a month, $100 a month, and even $100 a week. So in these episodes, I pull up the calculator, we crunch some numbers, and just see how much you would have to own of a certain company that the subscribers request. So this is actually the list that I do have. These are all requests from my subscribers that have left them. So if there's a company you want me to do that I haven't covered in the past or you don't see on the list, let me know in the comment section. I'll be happy to do it. I'll add it to the list and we will eventually get to it. But in this episode, the next one on the list is PennantPark Floating Rate Capital. That is the next one. So we'll go ahead and jump over here to Seeking Alpha, where we can see the ticker and everything. So we got PFLT is the ticker symbol. It is actually named PennantPark Floating Rate Capital. Currently trading about $11.39. If we actually pull up the company profile so we can see a little bit about the company, you'll see PennantPark Floating Rate Capital Ltd is a business development company. It seeks to make secondary direct debit, equity, and loan investments. The fund seeks to invest through floating rate loans in private or thinly traded or small market cap public middle market companies. It primarily invests in the United States and to a limited extent non-US companies. The fund typically invests between $2 million and $20 million. The fund also invests in equity securities such as preferred stock, common stock, warrants, or options received in connection with debit investments or through direct investments. Sector they are in the financial industry is asset management and custody banks. The employees are not actually showing up for this company. They were founded in 2010, and if you do want to do a little bit more research about their company, you could actually visit them at PFLT PennantPark.com, and then you can click on the investor relations. But if we go back up here, guys, you'll see that if we look at the year to date for the charts here, you'll see that this company is actually down 12.05% year to date. On the 1 year, they're actually down about 12.99%. And then if we look at the 5 year, they're actually down 18.58%. 10 years, they're down 11.77%. And then total since they've IPO'd or been publicly traded, they have actually been down negative 13.84%. So quite a bad return there for capital appreciation. Overall, imagine the time since 2010, you would have gotten a return. Or I guess let's say you invested $100, you would actually be down. Those $100 would actually be worth about maybe $86 or $87, not including the dividends, of course, but capital appreciation is no good there. If we actually look here at the 52-week range, you'll see that the lowest that they've traded in the 52 weeks has been $9.43. Highest they've traded has been $14.38. EPS is 1.21, PE is 9.40, dividend rate is $1.14. Dividend yield comes out to be about 10.01%. Market cap's very small, so it's a 516.49 million market cap. If we actually pull up here, guys, the dividend scorecard, again, they are in the financial sector, but if we go down to the dividend summary, they actually have a dividend yield of 10.01%, closer to the higher end. Not sure if it's sustainable. Of course, I'm not invested in this company. This was a recommended pick from one of the subscribers that asked me if I could cover this stock. But annual payout is $1.14. So if you own one share of this company, you would get paid $1.14 for the full year. Payout ratio is 95%. 5-year CAGR is actually 0. Dividend growth is 0 as well. Typically not my type of companies. I like to have the 5-year CAGR to be the double-digit 5-year CAGR really, and then a really small dividend yield, because 5, 10, 15 years from now, that will compound very, very nicely. Of course, this company does not have that criteria for me. Frequency that they do pay out this dividend is monthly, and that is about 10 cents every single month. For this company, let's go ahead and pull up the calculator, guys, and we can start crunching some numbers. So the first one we want to calculate is actually how much would you need to own of this company to make $1,000 a month. So we want to make $1,000 a month. There's 12 months in a year, so you multiply that. So in total for the year, we need to make $12,000. You actually will take this $12,000 annually and you'll divide it by the annual payout that they do pay. So you'll divide it by $1.14. What this is going to give you is the total number of shares that you need to own to actually achieve this. So you need roughly about 10,526 shares of this company. And so if you multiply this times the share price, this would actually give you the total amount of money you need to have invested if you're to purchase them right now. So you need to roughly have about $119,894. Quite a bit of money, guys, but again, it is also a 10% dividend yield, assuming they don't cut the dividend. And you know, let me know if you are invested in this company. A quick way to actually calculate this without doing all these, you could actually do the $12,000 that you need to make a year. You divide that by the dividend yield, which is right here, 10%. So you would do like that, and you see you roughly get about 119,000 as well. Quick way to calculate that. The next one, let's go ahead and calculate how much would you need to own of this company to make $100 a month. You could actually divide the previous answer by 10 and you would get that answer right away. But just so we do this, let's just go ahead and crunch the numbers. So we want to make $100 every single month, 12 months in a year. So we need to roughly make about $1,200 annually. So now you divide that by the $1.14. And you need to own about 1,052 shares of this company. Multiply it times the share price, and this will give you the total amount of money you need to have invested. So you need to have invested about $11,989 in this company. And then again, quick way to calculate this is you take the annual amount that you need to make, divide that by the dividend yield, and you'll see we get about $11,988, which is very close to that amount. Let's go ahead and do the last one, which is how much would you have to own of this company to make $100 every single week. This would be pretty awesome, because imagine every single week that comes by you would make $100, and so we want to make $100 every single week. There's 52 weeks in a year, so we need to roughly own about we need to make annually about $5,200. Again, divide this by the annual payout, and this will actually give you the total number of shares you need to own. So about 4,561 shares. You can actually multiply this times the share price, and you can find out the total amount you need to have invested. So you need to have about $51,954. Again, quick way to calculate this is you could take the 5,200, divide this by the dividend yield, and you'll see we roughly get about $51,948 in this company. Again, this is how you calculate this. Let me know in the comment section if you own this company. Why are you invested in it? Are you planning to hold it for the long term? And definitely would love to get your opinion in the comment section as well. Don't forget to subscribe with the bell notification. Definitely would appreciate it. We're trying to get to 9,000 subscribers. So definitely help me out as well. Drop a big thumbs up on the video. But let's go ahead and wrap up this video, guys, by looking at the dividend yield of this company. This is the yield over time. So if you'll see here, right here is the dividend yield. You'll see it's fluctuating over time. That is because the price of the company does fluctuate. So overall, it's been trading around about an 8 to about a 10% dividend yield of this company. Again, back around 2020, the March crash, this thing spiked up very, very high, and that's probably potentially because the share price of this company probably went down, which is about 26.79% dividend yield, and then it finally started going back down. And it's been fluctuating on 8 to 9%, and then recently about 10%. So this is what I have for you guys in this company. Let me know any companies you want me to cover. I'll be happy to add them to the list. I will talk to you guys later. Take care. Stay safe out there. Bye, guys.